You too. Welcome back to another episode of Total Wealth. And today is a video I created because we are at the extended time to file your taxes. If you are an entrepreneur, business, or even just a personal filer and you filed for an extension before April 15th, then your due date is now October 15th. And we are about 2 weeks away from that. And so I wanted to create a video to be able to help you guys better plan, prepare, and be in front of taxes and not behind. So I'm just going to share 3 simple tips that you may know, but you may not know why. And so we're going to go through these 3 tips. We're going to talk about best practices and what I mean when I say these things. So tip number 1, stay organized and gather all documents. This is very important, and I want to understand accountants organization and business owner organization, 2 different things. So when I say things like stay organized, what I really mean is keep all of that information in one location in case you need it. So that could be in a Google Drive where you just upload all your bank statements, where you upload receipts at. You could also be doing this in QuickBooks. You could be doing this. You could have literal files and have a file drawer, right? Whatever is comfortable for you and helps you stay organized, you need to institute that system. What you do not need to do is add up your receipts, count everything, do all of that. That stuff, you can do it, and that would be a big help to your accountant, but they get paid to do that stuff. So you don't have to do that, right? In the beginning stages, if you cannot afford an accountant or a bookkeeper, then okay, track some things and make sure you have some numbers with them, right? But that can be done on a simple Excel spreadsheet. And again, just load that Excel spreadsheet up into your Google Drive with your bank statements, your business formation documents, anything that your accountant would need, and just have that stuff ready. So then when it's time, you'll be ready to go right into it. The second tip is consult with a professional. Let me tell you what consult with a professional means. It doesn't mean go in, pay somebody at H&R Block to do your taxes and just walk out without any information. Consult with a tax professional means get on a professional's schedule for 30 to 60 minutes and have some clear questions that you need answers to. And do not feel embarrassed or distraught that you don't know these things, because the whole point of that consultation is for you to be more aware and more knowledgeable than you were at the beginning. I have time slots in my schedule, which I will link down to the kind of comments below. You do not have to pay for this consultation. Okay, I pay to do the work, but I'm invested in people understanding these things, because when people understand taxes, it's so much of a more smoother transaction and transition for you to become a business owner. You don't have that strenuous relationship with the tax guy, right? With the, oh man, here come taxes again. I want you to be excited about taxes, not just to pay them, but understand that taxes is a result. So if you have to pay tax, that means you had a successful year. That means you made money in your business, because if you didn't, then you don't have tax to pay and you don't have to worry about it, right? There's actually a $20,000 business deduction for 2023, where if you have a business, if you made less than 20 grand, 9 out of 10, you're not going to have to pay any tax, right? And so, and that's not even including the expenses, what you paid on if you have a website, if you have Zoom, or other expenses that come along with running a business. And so definitely want to get on an accounting schedule and get a consult ready. And last but not least, use your calendar. And just like when you were at work, when you paid yourself, taxes came out of your paycheck. Now, we all wish they didn't, but they did. It's a part of our lives, right? Taxes is here. The 2 things in life that's guaranteed is death and taxes, right? So being that they're guaranteed, we need to get ahead of them. So for businesses, you guys should not be filing your taxes once a year. You're going to get a bigger tax bill, and you're going to have troubles paying that full amount, especially if you're somebody who made $100,000 in a year, right? Or something of that nature. because now you're looking at a $20,000 tax bill, something that's in that range between 10 and 20,000. And so that can get, that'll be something that's difficult for a lot of entrepreneurs to pay in one shot and can be burdensome even on a payment plan, right? If you had another $1,000 a month that you had to pay, yeah, you might be able to pay it, but that is a bill that can become burdensome, right? And so what I recommend is estimated tax payment. So the best course of action to do is every quarter you make a payment on that quarter on the 15th. So from January to March, you calculate how much you made, 30%, you pay it to the government. Why am I saying 30%? Because normally that's going to cover your tax burden. And if you pay too much, it's okay. You would just get a refund, just like if you were an individual and you paid too much. We all normally get refunds, right? Businesses do not operate any differently. You are here to pay the tax that you owe and nothing more. Okay, that is my job as an accountant, right? I am here to make sure you pay your fair share and not a penny more. The IRS is that for the government. They're there to make sure you pay your fair share and not a penny less. And so we are here to do a dance to make sure that the government gets what they need from us and we don't get in any penalties or anything for not contributing to the greater good, right? But those estimated tax payments should be done on the 15th after the quarter. So April 15th, July 15th, October 15th, and January 15th, you should be making estimated quarterly tax payments of 30% of whatever you made. And it's best to do the profit first accounting method and just sit an account just for taxes to the side. So when every transaction comes in, you make $100 off a transaction, 30 of it should be going to that tax account. The other 70 should be going to either paying you company expenses, or maybe you just want to sit some profit in the business for future growth, right? But the goal is to have a plan, because with a plan, you execute better and you have a roadmap to follow, which is going to help you get to where you're trying to go. So I hope this video helps you guys. And if you have any questions or anything you would like to add, please comment down below and do not hesitate to book a call. I'll speak with you guys soon, and never forget, if you ain't tracking, you ain't trying.